Hey everyone, and welcome to our webinar about dynamic leverage. My name is Alejandro Zambrano, and here we're gathering to talk about dynamic leverage. I'm gonna share my screen in a second, and if you have any questions, this will be a good time to ask away, because it could occasionally be quite a complex issue, dynamic leverage. Now, let me just start by sharing my screen. So we already have a couple of people here: Anne-Marie, Graham, Ioannis, Sean, Mohammed, and Farouk. Thank you so much for joining me today. So let's dig in. So what's interesting with dynamic leverage? How can it actually be beneficial? And let's start with that. So to keep it super simple, normally, and up until a couple of months ago, usually when you would decide to open a brokerage account with a broker like Thinkmarkets, you would have a fixed leverage amount. For example, anything from sort of 30% leverage like we have in Europe to 50 to 100, sometimes 200. And this leverage amount remained fixed. But what's happening now is that with dynamic leverage, you can actually have higher leverage when you have a smaller position, and then less leverage as you open bigger and bigger position. And if you don't know what leverage is, let's take a step back. Imagine you wanted to buy a house. The house is $100,000. Not so many parts of the world where you can get a house for $100,000 anymore, but you get the idea. $100,000, and you go to the bank, and usually the bank is going to ask you for at least a 10% deposit. So you have to put $10,000, and then the bank is going to give you the 90,000 so you can purchase the house. All right. So because we're effectively buying something worth 100,000 with just 10,000, then we have a leverage of 10. Okay, so that's leverage. And it's the same thing when we operate in the markets. So the benefit of this is that we can take bigger positions than we normally would do. So why do you want to take a bigger position? Well, if you look at something like the GBP USD, and this is a 1 hour chart. So for today, or from sort of, yeah, the whole day pretty much, is moved a total of 69 pips. Okay, that's 0.5%. So if we want to exploit this movement, we need to use leverage, because otherwise it's not just worth it. Like 0.5% is a very, very, very small amount. But example, if we would use 100 times leverage, then this would be obviously much, much bigger. So that is how we can use leverage to our advantage. And before, you were locked at 100 times leverage, okay, 100 times leverage. So if you wanted to open, say, for example, a 100K position, a one lot. So one lot makes every pip worth $10. Okay. One lot makes every pip worth, actually, it makes every pip worth $10. Okay. So in this case, if we wanted to trade on the back of this, this was 69 pip. So we could make $690 with a 10K position or 100K position. Okay. So before, when you wanted to open this, you had to have maybe $1,200 to open this position. But today, with Thinkmarkets, it's actually enough to have, and let me show you here, $62. So to open this is the same amount, 100 grand, okay, 100 grand. If you wanted to open a 100 grand position, you only need to put $62 to start. Whereas before, you had to put $1,200. Does that make sense? So instead of putting $1,200 and locking it up So you can't really use it for trading and open new positions. You can now use that money for trading. So for example, if I just for the sake of it, just to show you, if I would put a stop loss here and I put a stop loss just below the low here, so my risk is going to be 23 pips, as you can see here, 23 pips. And then to open this, if I get stopped out, I'm still going to lose the same amount as if I have low or high leverage. So I could lose $230, but I can open this position with only 62. Whereas before, I have to be exact, $1,290. Does that make sense? So why is this interesting? Well, because a lot of people nowadays, for example, they would go and buy a prop trading challenge. So they say, okay, I will pay $1,000 to be able to trade with a prop trading firm account of 100,000. But first, they need to pause the challenge, and usually it's a two-step challenge. So you spend a couple of months there, and the problem is that it's not that easy to pause these challenges. Even myself, even though I'm a profitable trader, I don't try to take them because firstly, I have more than 100 grand I'm trading with anyway, much more than that. So I don't even have to have the money. But I wouldn't take them anyway because I have to be confined within very tight rules, like don't lose more than say 6% in total. Like if you want to make some serious money, you usually have to have some big risks. I think everybody knows that. So I don't even try. But here, for example, if I were in a position where I said, oh, you know what, I want to buy a prop firm, or I just open a regular account. Well, opening a regular account is much more interesting now because I can open positions like if I had a 100K account, but I don't have to have that. So the money I can put into buying one of these accounts, I could now put into trading. Now there are some trade-offs as well. It's not like for like, okay, it's not, it never is, but at least here, nobody's gonna sort of give you problems because you lost a little bit more than the drawdown and the rules that they had. So that's why I found this super interesting. So how do the different tiers work? So this is a link to Thinkmarkets. I will send that to you in the chat. Let's see if I can find the chat. Here we go. So on this here, you'll see that there are different tiers, effectively different levels, okay? So for example, there are different groups, you get different tiers. So for example, in group 1, where you have GBP USD, which is this one here, and all majors pretty much. If I trade between 0 and 100 or 1, which is 100, which is what 100,000, which is what I have here. This is a 1. Sorry if it's new and complicated. One lot is 100,000 units. Okay, so if I trade between 0 and 100,000 here, my margin is 0.05. Okay, that gives me an effective leverage of 2,000. If I wanted to open two positions, so if I make this 200,000, you see here, then this goes up. But remember, it was 62 before. So 62, if I would multiply that by 2, I should be at around 124, right? But it's slightly more. Why is it like that? Well, because on your first position, you have this margin requirement, but then on your second position, you have the 0.1. So you have 1,000 times leverage on the second leg, and then you have 2,000 on the first leg. And then if you open more, so if you would start to trade like in bigger account sizes, like 500,000 or more, then obviously it goes to 500 and then it becomes less and less. But most people, they will be, I would argue that 99% of people are going to be here. Maybe they go up here, where they start to trade bigger positions than 100 lots. So that is dynamic leverage. Now, the dynamic leverage is different for different asset classes, but this is where you can check. So Other currencies which don't have too much liquidity, for example, dollar versus Norwegian kroner. So you can always trade the dollar, but the Norwegian kroner, you would usually buy that during when it's daylight, when the Norwegian banks are open. So it's a currency that sometimes, doesn't have too much high liquidity, and that's why the leverage is slightly less. But it's still 1,000, which is it packs quite a lot of a punch. And for indices, for example, you have a 500 times leverage to start, and then 200, and then commodities like gold. Sorry, yes, gold. No, not gold, but Brent crude and natural gas, West Texas Intermediate copper, and I think this platinum. You have 200x, and then on crypto you got 200. So we're talking about some serious amounts here. This is an ETH, and then in Bitcoin as well, 200. Here is gold and silver. I missed that. So it's like 500 times. So, it's happy days. Now, something before I have to say that you bear in mind. So we alluded to this before. So we're talking about um, liquidity, okay? So just when the market opens, the liquidity is low because there's not too many banks open. Simple as that. Because when the market opens at 21 p.m. London time, then on a Sunday, then people are still enjoying life with their families. So you wouldn't have like the London banks and the European banks open, but you would have Australian and Japanese bank and also New York banks providing some liquidity. Um, Long story short, though, in the on Friday and on Mondays, so when the market opens and when the market is just about to close, um, the margin is not as generous. So what you can do is just don't trade the last hour of the day of the week and don't trade the first hour of the week. Now, if you hold a position that you open outside of this window, then it's not going to change. So you can open your position. That's no problem. And you can have it open. It's not going to be a situation where they're going to say, oh, you need to add much more leverage. So that's what you need to bear in mind. Now, obviously, there are situations where they could change. What I'm saying with this, by the way, the reason why I said this is that if you open the position outside of this, and then suddenly it is the final hour of the week, that's what I mean. They're not going to ask you for more money. The only time they're going to ask for maybe more margin is if there are major economic news. So far, I haven't seen them implemented a single time. But for example, if there's going to be an election, anything can happen, say on major elections. But we don't really have any of those right now. The only election I know is coming up is the German one, but I don't think it necessarily is going to have an impact on this because it's not at the same level. It would be different if we're talking about the US election or the Brexit referendum and things like that. So that's it. In a nutshell, you now have ability to take positions much bigger than before, and you have the different tiers, and you don't have to have your money locked up in uh, unusable to some extent. So with that, let's see if you have any questions. Yeah, so you can just put them in the chat. There we go. There we go. Let me see. There we go. Q&A. Ioannis is asking, does dynamic leverage apply to all trading instruments or only certain ones? So they would apply to all major assets, and you have an ample amount of different levels of different instruments here. So yeah, I would say apply to almost all, but not all of them. Again, you have some that are even more exotic. But look, even something like the dollar against Brazilian real offers a 500 times leverage. In Hungarian forint, Hong Kong dollars, Chinese yuan, Polish zloty. So yeah, you do have access. And on the crypto as well, you have access to quite a few things. They did launch Trump coin. I don't know if you saw that. So you can actually trade Trump's own coin with Thinkmarkets. I have a question from Val. Is there a minimum deposit requirement or special conditions to access dynamic leverage? So the minimum deposit requirement. So remember, to even open a position, you always have to have like the margin, right? So to some extent, you can say that the margin has dropped down. You know, I mean, it has dropped down. Whereas before, if you want to open, you have to have $1,200 to start with, but now it's effectively lower. And yeah, it's not available in all regions. And I think the best thing is actually just go to Thinkmarkets website and ask the consumer, the customer support if you can have it or not. The easiest thing, because I know some have already been changed, so it's coming like a default. So you should easily see this. For example, if you would log in and you have 100 grand and you need to open 62, then that's how you know your leverage or your margin. And it's not too complicated actually. Look, if you just put, okay, it is a bit complicated. Let me show you. You need to take 100,000 multiplied by the exchange rate, which is 1.2585 right now. So the actual value of this is $125,000, and I divide that by 62.93. So you can see here that my effective leverage here is 1,999.84. So that's how you can check it. If you would, for example, log in and you see that this is a much higher amount to open 100K, then you could see it. Again, just take the amount, multiply it with the exchange rate, divide that by the, sorry, yeah, you divide that by the margin requirement, and there's how you can calculate it. So we get a question from Val. How does dynamic leverage adjust in real time? So it's fixed. So what happens is that, for example, because it's not the first trading hour of the week, and it's also not the last trading hour of the week, I can open a position. And when I open this position, it stays locked. Okay, so I don't have to add more margin to this position. Okay, see here, looks like I go. So it doesn't change per se. The dynamic part of dynamic leverage comes from the fact that the second position, so if I look here on dynamic TS on Forex, is that if I buy for more than 100,000, for more than a lot, remember 100,000 units in FX is one lot. So if I open more than one lot, then that is when I actually see the leverage increase. And that's why we call it dynamic leverage. Is the dynamic leverage included in a demo account as well? And how can I train myself to use it to my benefit? So I don't think necessarily you can train yourself in that way. Okay, first things first, is it available in the demos? I think it is. I tested a demo just a couple of minutes ago. Let's see if I can log in again. And it was available. So it should be there. If not, it's going to be really, really soon. I think what's important to remember though is that the difference is this. If you want to trade short term, if you want to just grab, 10 pips in the market, to grab 10 pips in the market, if you would open up a mini lot, okay, then you will make $10 on that. Does that make sense? $6, 10, yeah, $10. If it will go up, you will make $10. So obviously, for some people, $10 is like a lunch or something, it can be worthwhile for them. But for others, they want to make $200 or $300 a day at least. So the people before, they couldn't do that necessarily. So for example, imagine you're a student. When I was a student, I had $2,000, 2,000 euros to be exact, to start trading. So I couldn't really I couldn't really scalp. It wouldn't make sense for me because I couldn't open big positions. So then I wouldn't even touch the market for scalping. So I had to hold positions up for longer. But nowadays, with this, then a person with $2,000 or 2,000 euros can scalp. So if you have 2,000 euros or $2,000 or the equivalent, then there's nothing there that is going to stop you from making maybe $200 or $300 a day. So that will be 20 to 30 pip a day. The only thing that's going to stop you is obviously your skills. Okay, it's your skills. Whereas and that is what's going to stop it, because the financial markets has always been like this. You see, when I started trading, you didn't have the mini lot. You couldn't open with 10,000 units. You had to start with a big size. And when you open a big size, you just take very high risk. But then they introduced the mini lot, and then a couple of years later, the micro lot was introduced. But the leverage pretty much remained the same, which was an issue. So what's the leverage in use time on gold and FX? So this is, I think I understand this question, and you're coming from the prop trading side, I would argue, because when you're trading with a regular account, not a prop trading account, okay? So when you're trading with a regular amount, then the margin doesn't change during use. You don't have to open and close positions during use. But for example, if you would trade with a prop firm, then prop firm usually have rules that you're not allowed to close or open positions a few minutes before and a few minutes afterwards. In this world, that doesn't exist. Graham is asking, we will be getting a recording of this soon, so we will most likely upload it on YouTube, so you will find it there. Why is the margins much higher for the prop challenge accounts? Peter is asking. So you would need to ask the prop challenge firms. But what they're trying to do usually, not just say Think Capital or any other firms, is that they want to foster responsible trading. So usually they have these limitations. Here it doesn't exist the same way. Here you yourself and the money you have limits how much you can trade. Does that make sense? So that's why usually you have more availability here. It's a bit like oh yeah, that's I think that's the best explanation. That they have their own rules which they think makes sense, because what they want to do is they want to find responsible traders that can trade without huge risks, right? Why? Well, because if they would have very low margin, maybe for the users, you can have a trader that just by luck opens a position and then, is then considered to be a funded trader. Yeah. And the problem with that, maybe it was just luck. And so that's why they have those rules. Thinkmarkets, as a broker, we don't have any rules like that. You can take your account from 0 to 100 to almost down to rock bottom. The only thing that is going to stop you from trading here is the money that you have in the account, right? So if you burn your money because you took bad trading decisions, then obviously you can't trade no more after that. unless you add more money. Okay, I hope that answers. So we have a survey. If you would be kind and just fill that out. And if anybody's watching the recording here, you can just drop them in the comment. And well, because I would assume it'll be on YouTube, and then we'll come back to you. And I want to thank everybody here: Anne Marie, Farouk, Graham, Ines, Ioannis, Sean, Jack, and Mohammed, and Peter, and Val. Thank you so much for joining me, and I'll see you guys soon. Thank you, and bye bye.